Well, hello. Welcome again to Financial Fridays. Dr. Brian Hankerson with you and ready to share some valuable tips with you once again on how to better manage your money. As you know, in our first session, we talked about breaking the spirit of poverty. How we're fighting, this is a spiritual battle when it comes to our finances, and Satan wants us to fail, but God wants us to prosper. And then in the next session, I talked to you about one of our starting points is knowing where you are. If you want to get a remedy to an illness or a sickness or a problem, the first thing you have to do is identify the problem, do an assessment, and then we can look at the solutions. We talked about the term net worth, and we talked about knowing your cash flow. Well, today I want to demonstrate for you exactly what this net worth thing is, because it's a term I really want you guys to embrace, because it's going to be very important as we go forward to measure our success and our finances. So I'm going to walk you over to the board here where I've written an example of how to compute your net worth. As I mentioned, net worth is the difference between your total assets and your total debts. Another word for debts is liabilities. Let's start with our assets. If you'll look at the board here, assets are things that you own. For instance, a home. Your home, let's just say your home's value is $200,000. Not what you think it's worth, but if you were to sell it, what someone would be willing to pay for it. Your cars. Many of us, we love our cars and we think they're worth a whole lot more than they actually are. But what's the value, what's the blue book value of your car? Let's say it's $25,000, or cars, maybe it's 2 cars. And then you have furniture. You have computers and electronic equipment like your phones and things along those lines. Let's say your furniture is worth $12,000, your computer and electronic equipment $3,000. Let's say you have a retirement account set up. It could be a 401k, it can be an IRA, it can be mutual funds, but money you have set aside for your retirement. Let's say that's $50,000. And then you have other property. Actually clothing is property. So let's just say there's other property that you have around your house, at your business, of $10,000, and you have cash in the bank of $1,000. You add all those things up, and your total assets are $301,000. Then we take a look at what our debts are. Our debts are things, it's money that we owe to someone or a company. So with a home, oftentimes we have a mortgage. So let's just say on this home, we have a mortgage of $175,000. We have credit card balances that you still owe of $20,000. Store cards, like maybe a furniture store, $7,000. Student loans from when you went to school, $24,000. And car loans relating to the cars that you have here of $30,000. Oftentimes your car loans are more than what the value of the car is. In this instance, your total debts are $256,000. So you compare the two. You take your total assets minus your total liabilities, and your net worth in this case is $45,000. We really want our net worth to be a positive number. Oftentimes, however, you may find out that your net worth is a negative number. As I told you last week, whatever it is, we have to know what that number is and then work to make it better. How do we make it better? Well, there's a combination of ways. We can increase our assets, we can decrease our debt, or a combination of both. So every decision we make as it relates to our finances, we want to make sure it's either increasing our assets or reducing our debt. And we're going to talk in another session about how to eliminate debt, because that's a poison that really hurts many of God's people in their finances. Well, that's it. As you know, I just want to spend no more than 5 minutes or so with you guys to teach on this subject matter, and I'll be joining you next week for another episode of Financial Fridays. God bless you. Bye-bye now.